My name is Jerome Heusinger. I'm Senior Development Manager here at Ethex, and I'll be hosting our Cuppa Club today. If you are new to Ethex, we're a direct impact investment platform that connects people with high impact organizations that are creating positive change in communities across the UK. Our investor community helps fund businesses and projects tackling some of today's biggest social and environmental challenges. And today we're spotlighting one such organization. We are delighted to be joined by Tim Rooney, who is the CEO of Salad, and his colleague Phil Hyatt, who is the CFO. Many of you will already know Salad from their previous successful bond offers on Ethex, all of which have closed fully funded or overfunded. So firstly, a big thank you, a huge thank you to those of you who have supported those raises. Today, we're going to focus on the impact this investment has made so far and the ongoing need for further funding for the fair and affordable lending that Salad provides. Before we get started, there is some housekeeping to do. We'd like to let you know that the Cuppa Club is recorded and made available to watch on Ethex's YouTube channel. And we also edit this to our highlighted version. This is not a financial promotion. And if you do need advice, please talk to an independent financial advisor. This Cuppa Club will run for 30 to 45 minutes. We'll keep the conversation informal, and there will be plenty of time at the end for your questions. So feel free to pop those in the chat as we go. So with that, Tim and Phil, thanks so much for being here. I'll hand over to you to kick things off with a bit about the problem Salad is tackling and why this work is so important. Just a quick reminder, this is the fourth Salad if ISA bond offer. It's currently live on the Ethex platform. It went live about 4 weeks ago. The great news is that we've already reached around 2/3 of the target, which is £600,000, and we have 64 days left until January before this offer closes. So enough of that. Tim, Phil, let's set the scene to explain why Salad's offering is so important. Currently, we read that more than 16 million people in the UK are financially underserved, and there is an unmet demand of around £2 billion for fair and responsible credit. Can you explain what this means and what the consequences are?
Okay, thanks, Sharon. Hi, everyone. My name's Tim Rooney. I'm the CEO of Salad. I've been with the business since December 2018. We went live in May 2019. I'm going to pick Jerome up on one of the figures he's mentioned. I've recently sat on the Affordable Credit Access Committee with HM Treasury, and there are now 20 million people who do not have access to affordable and appropriate credit in the UK. We have been lending to people who are in work. We lend to people typically in the 4 or 5 deciles of income in the UK. These are people who are typically taking home between £1,500 net a month and sort of 2,200 at near the top end. Why is it important? It's really important because a lot of these individuals have got impaired credit scores, and they are unable to access mainstream credit products through their banks. All of the customers that come to us recognize that they have a poor credit score, and credit scores take an incredible amount of time to change. The numbers of people that are applying to us, a year ago it was about 3,000 people a day. Now it's nearer 4,000 to 4,500 people a day. And with the lens of open banking that we use solely to make those lending decisions, we can see a lot of problems within the financial lives of those individuals. Now, I have to say, our accept rate is very low. We're accepting around about 5 to 7% of people, because the people that we can't lend to have not enough disposable income to take on a further commitment. They are over indebted, a lot of those individuals we see have got just very little disposable income. So Salad's mission is as much to be able to lend to individuals, but also to be able to help those individuals through signposting to people like step change, debt charity advice, gambling advice, but also with the new creation of our Pickle app, which you can download on the App Store, we actually tell consumers where they're spending too much or why they are being failed. And we see that as a part of the mission of Salad.
Okay, Tim, something you've mentioned earlier on. Not only have you and Phil um, set up Salad, you've grown Salad, but Salad is also heavily involved in furthering awareness and the fortunes of the industry. And there's a government that's got a new financial inclusion strategy. Could you discuss the role that Salad has played there, the participation, and what have you contributed in terms of its formulation?
So yeah, we've been part of that financial inclusion subcommittee for the last 6 months, and we're very pleased to see the results of that being published last week. To my mind, it didn't go far enough. I think there are more things that can be done, although I would readily welcome the support that credit unions who are also lending into this sector are going to get from the government. Um, I think it's really important that we surface what we see in the data of the applicants and also the consumers. And I think a lot of people find it very difficult to understand that within a week of being paid, a lot of our consumers don't have access to a couple of £100 that is potentially the difference between them being able to service an emergency that comes up. I think one of the things that I'm acutely aware of is our consumers are very financially savvy. They are juggling the money that they have coming into their bank accounts and then the liabilities that they have to settle. And one of the things that I've always said is we spot the customers who are able to spend to their means and not beyond their means. And that's the lens that open banking gives us. But I don't think people are aware of the financial stresses that are being suffered by the people in lower income levels. And that's part of what we have done is bring that to light.
Okay, thanks. So Salad has recently released a new social impact report, and you've been very disciplined in terms of releasing such reports almost on an annual basis. And this one highlights something really powerful. So over the last year alone, Salad has helped more than 90,000 UK workers avoid high cost credit, and it has saved them more than £41 million in interest. That's thousands of people experiencing less stress, more stability, and a better chance to get ahead. Can we just cover how you do this and what makes you different?
So what makes us different is that we are using open banking to make affordable and appropriate lending decisions for those individuals. Um, Now, credit scores are used by the rest of the consumer credit industry to make a decision about an individual. And typically, as I mentioned at the beginning of the call, a lot of our consumers have a damaged or impaired credit score because they've missed some payments on some bills that have subsequently been reported. 28% of our consumers have had a county court judgment in the last couple of years. And just focusing in on county court judgments, I mean, it takes about 18 months from a default process for a county court judgment to be effected against a consumer's credit record, and that stays with them for 6 years. And that is an absolute no-no for the majority of prime and near prime lenders in the UK. And out of the 5.4 million county court judgments in the UK, 3.4 million of those are for less than £1,000. So a mistake that was made historically at a point of financial stress in the lives of our applicants stays with them for almost 6 years, which I think is desperately unfair. And in fact, we do take into account the fact someone may have a CCJ, but the majority of the CCJs are for very small amounts and with a very historic back end. Open banking allows us to look at the fixed income and the disposable income of a consumer in a really fantastic lens. Um, and because of that, we are completely different. I see one of the questions that's come in is about credit unions. So
Yeah.
we work alongside credit unions. Credit unions have a cap at 42.6, and a lot of our customers are customers with a credit union. But unfortunately, due to the risk appetite of credit unions, they're not able to make lending decisions to the customers that we're able to make a lending decision to. But we are working very much hand in hand with ABCUL, who are the sort of association of credit unions in the UK. And we do refer our customers back to credit unions when they come back to us if they need another loan, when we always say, have you tried your local credit union? I don't think there's enough being done to work with credit unions, and that's something we're trying to solidify through responsible finance, of which I'm a non-exec director, and it's a sort of collective body of CDFIs. So we're trying to get a balance between who the credit unions serve and who CDFIs can serve and work closely together.
Thanks, Tim. So your comments kind of overlap largely with a question that's come in from Alan, but I'd just like to deal with that. So Alan says, why are people able to do better borrowing from Salad rather than through more conventional systems such as bank loans? Is it, and this is a multiple choice question, A, they cannot access such systems due to poor credit ratings or the like, B, lower interest rates with Salad, C, other support offered by Salad, D, something else I haven't thought of, E, all of the above, which is a great question. Thank you, Alan. And
Yeah. So
any thoughts
interest,
on that?
yeah. Well, interestingly, as I said, we don't use a credit score to make a lending decision at the point of the loan being offered, but we do report the credit loan performance and the fact that that consumer's taken out a loan with all of the credit bureaus. And as a result of supplying that information to the credit bureaus, 1 month after the loan, we get to see the credit score of those individuals. Now, I know that the bank credit lending level is 580 on average. 580 is the credit score you'd need to access probably prime lending from your bank. The credit score of our consumers is 470, which is quite a way beneath that level. And again, interestingly, credit unions have a credit accept rate of about 510 to 520. It does differ slightly. So we know the consumers that we're serving have impaired credit. We can see that 1 month later. We are realistically looking to rehabilitate those individuals. And as I say to the banks, I'm lending to your customers using your data, but it would be a fantastic pathway if we could rehabilitate those individuals. And people are rehabilitated by taking out a salad loan. We see a 30 to 40 point movement in their credit score for a successful repayment of a salad loan. Unfortunately, our rates are not as low as a bank, but banks don't lend to the people that we're lending to. And that's quite clear.
Okay, let's go back to your social impact report. And as I say, it makes for impressive reading. And what we'll do, we'll share a link to this in our follow-up email. But can you give a brief overview of how the report statistics demonstrate how Salad is actively closing the credit gap in the UK?
Sure. So we are aware, again, through the open banking of where customers are borrowing from and who they are borrowing from. And we can see that there are higher cost providers than Salad. And we know that loans are being taken out by our consumers with those companies. So that's how we affect our saving process because we know what our interest rate is and we know that the amount that they're borrowing is appropriate and affordable for them. Within the impact report, which, as you say, we've produced every year for the past 4 years, we see a lot of the individuals are in rented accommodation. So 80% of our customers are in either private or social housing renting. Gender split is roughly 50-50, but there are a lot of people who are in a single parent position with family. A lot of our consumers also have some form of additional benefit income through universal credit to support them because they, as I say, they are in that lower 4 or 5 deciles of income. And we can see who they work for, what they're spending their money on, and we know that a lot of those individuals have really suffered with energy cost increases and the cost of living. It's been a real big hit this year with the RPI being as high as it is. So we are very much monitoring those individuals to see that all of our loans are affordable and appropriate. And again, this is something we took a brave decision last year to publish our complaints record that we have with the Financial Ombudsman, and we have incredibly low complaint levels for unaffordable lending. We have a fantastic relationship with the FCA. We're in regular dialogue with the FCA and also the Financial Ombudsman. And yes, where we have made the wrong decision because something else has come to light as part of our process, clearly we've had to make amends. But our complaint numbers are incredibly low because of the fact that we use open banking.
Okay. So as we've discussed before, you've enjoyed tremendous investor support for your previous bond offers on Ethex. Can we look at how this money has been used and the impact this has helped to create?
Philip, can I go to you on that?
Yeah, sure. And thanks, Drew. I'm Phil, the CFO at Salad. So yeah, as you say, our first 3 offers have raised nearly £2.7 million from over 640 investors. And over 2/5 of that amount actually has come from individuals that have invested in more than one raise. So a really strong signal of confidence. So all the net proceeds from those past offers are used directly for lending. Now, I use the present tense there deliberately because the money is continually recycled over the 5-year terms. So with an average loan size of, let's say, £1,000, those proceeds will have initially funded 2,500 loans. Because all our loans are monthly amortizing loans, the money comes back very quickly and we're able to re-lend the capital. This recycling effect is further amplified by the fact that we have a committed £100 million senior debt line in place, which essentially finances the loans that have been originated using the Ethex capital. So over the course of this 5-year term, we're able to lend many millions of pounds in the sort of snowballing effect from the initial capital that we've raised. And this speaks to the fact that this money is incredibly valuable to Salad and is able to have a huge impact on the customers that we serve.
Yeah, and that's so important to grasp. Without this sort of junior debt, if you like, that is supplied by FX investors, you would be unable to unlock that wider pool that is available to you from senior sources, which is really important in terms of exponential impact. Okay.
Can we
Thanks,
also
Phil.
add, Ron, I was going to
Yeah.
say, I think it's really important for the investors or potential investors to understand this money is being used solely for the purposes of lending. It's not being used to fund any part of running our business. So none of this money goes towards the operational costs of running the business, overheads, or investments in other areas. This is purely being used in a sort of on the basis that Philip has mentioned for lending. So we're not using it to raise money for anything else. We're just using it in its purest way for lending out to consumers.
Yeah. Tim, we've been asked and you've responded, so thank you. What exactly is open banking? You've provided us with a link, but could you just sort of summarize it in a few words?
So interestingly, Salad were given an FCA open banking license earlier this year, and we are the only consumer lender in the UK that has an FCA license to actually apply directly to banks And with the consent of a consumer, the consumer can share up to 2 years worth of transactional data with us. It's a process that happens over the internet. It is an FCA regulated process and it relies on the consent of the consumer. And we've sort of pioneered the way on that for many years. And I think in the financial inclusion report, they now recognise that open banking is the best proxy for making loans into the sub and near prime marketplace. So it's a process that not many people have heard of, but our consumers, once they are shown how it works, they're very comfortable with it. We've also introduced variable recurring payments, which is again an open banking way of collecting money very seamlessly. We put that in earlier this year, which has allowed us to service people who are perhaps weekly paid or fortnightly paid. So we are at the forefront of open banking. We're now connected to 10 UK banks directly. The consumers absolutely recognise that this is the way that we'll make lending decisions. And again, looking at the Trustpilot reviews, which I do, I look at every single one of them. People were a little bit uncertain, but they're very comfortable. And we do display to them the link that I've shown to Alan and others in the chat about how it works. And there has been no problem with it. People are very comfortable with it now.
Okay. A couple of questions, and this comes up, this is the fourth time we've done a Cuppa Club. But we always get questions about interest rates from two angles. And firstly, from Tim, what is the interest rate that you offer to your customers? How big is the average loan and what sort of range is there? And how long would a typical loan be? And then I'd like to follow on with a question that we've received by email from Janet about the interest rate that is attached to this offer to investors. So if either of you could cover both those areas, that would be great.
Philip, do you want to go on our APR and the loan sizes?
Yeah, sure. So in terms of the product offering, our loans start at £300, they go up to £2,000, and the term is 6 months to 24 months, and the APR is between 59.9 and 79.9. We use risk-based pricing. So for our biggest loans, £2,000 loans over 24 months, they attract the lowest rate of interest at 59.9. And our customers can refinance their loans as well, so they can get top-up loans, which is absolutely subject to a full re-underwrite.
Is it worth also mentioning on our website, we've got comparisons between the cost of borrowing from mainstream banks and the cost of borrowing from Salad. And I know it's one of these things that comes up all the time. Your APR at 79.9. Oh my God, that's horrific. And I think it's because a lot of us are used to borrowing on a credit card, perhaps at 29.9, mortgages at 3-4%. And if we were to go to our bank, we would certainly get a very low interest rate. But I think we're not suffering with the problems that we see our consumers suffering with. And I think there is a misconception over the comparison between long-term financial products and the shorter term products that we offer, with the inherent risks of lending to people who have credit impairment. But as I say, on our website, you can see, and I'll post the link in a minute, you can see the cost of borrowing from us. It's not a hell of a lot more money, but we've got a lot more risk in our business model than if we were lending to prime individuals.
Okay. And then the issue of the interest payments to investors. So Janet puts it very plainly. She feels that she could be making an unfair return from people who need this money more than she does. How would you address that challenge?
Yeah, I think it's a good question, and it's one that we have had on occasion before. So the way I would answer it is this, in terms of our thinking as to how we would set the interest rate on the bond. Although FX bonds only form a small part of our capital stack, they play a really crucial role. It's catalytic capital. It enables us to unlock and utilize our senior debt facility, which ultimately allows us to lend a lot more money. So for that reason, we need to ensure that the bonds are attractive for our FX investors, and we're mindful that they're motivated by social impact as well as financial return. Ultimately, the more money we raise, the more money we can lend and the more people we can support and the more positive impact that we can have. So the rate is set with that objective in mind. If we were to raise this type of capital from purely commercial lenders, it would be significantly more expensive as well.
Thanks. And what you just said highlights the sort of the impact, the social investment premium between commercial and an FX offering. So thanks for that. Chitra is asking something very interesting.
It's a great question. It's a great
Yeah.
question.
Shall I
So-
just read it out? Hello.
Sure.
You shared a gender breakdown of people you work with. Do you have a racial ethnic breakdown also? Given how racial bias can affect lending and other decisions, what work are you doing to address this possibility?
Right. Chitra, great question. We do not ask on our mainstream credit product the ethnicity of the borrower, in the same way that we do not ask the purpose of the loan. We believe that neither of those things have a bearing on our lending decision. Our lending decisions are very much based on that fixed expenditure that's displayed to us and the disposable income. So there is no, we don't believe, and again, our customer duty panel regularly hold us to account on this. We believe there is no racial bias in the lending that we're making at all because of our use of open banking. But again, more importantly, as a result of our FCA license to go and get open banking, we are able to see what consumers are spending our loan on. And that's really interesting data. And we're just starting that journey. And that's going to be very interesting. We don't believe that consumers are spending this money on frivolous purchases. We see it in the early stages of the research that we've done, that they're using it to pay for emergencies that would come up. It's not broken boilers because, as I say, 80% of them are in rented accommodation, and that's typically the landlord's responsibility. It's for bills, expenses, and emergencies, which a lot of people are facing. Our customers lack resilience. That's the real problem. And that resilience is the point at which they need to come to Salad to borrow small amounts of money to deal with that need in the moment. Again, I would refer people back to look at the Trustpilot reviews. They do echo the sentiment of who our borrowers are.
Okay, so at the outset, you're telling us that there is no data with regard to racial or ethnicity. Does that hold throughout the process?
Absolutely.
Right. Okay.
Absolutely. Yeah. I mean, we are bound by the consumer duty regulations. We have looked at all aspects of our lending in also in terms of, is the product appropriate? Is the cost of the product appropriate? And we've satisfied us on ourselves on that. We are held to account by our board for that process. And also we report to the FCA on our consumer duty. So interestingly, we've just completed a fairly huge task, which is the first time we've had to do it, which is the FCA have looked at all of the outcomes of the loans that we have made. So the FCA really are stepping up to look at this sector and are saying, look, it's all very well lending affordably, but are those loans appropriate for those consumers? And can we see a benefit to the consumer in taking out your loan? So there's a big focus shift that's happened in the last couple of years.
Yeah. Okay. So just jumping around a bit, Zach has asked about personal credit scores with Experian and Equifax, and the fact that the results that you get from either of these are by no means consistent.
Yeah.
And the bottom line is, our credit scores old tech that needs reform urgently.
I mean, for my sins, I did work at Experian for 6 years prior to joining Salad. And I can say that credit scores work effectively and very well for prime customers. But it is our experience that they do not work well for subprime or near prime customers because they don't have, I mean, just thinking about it, one of the things that's not reported that the reference agencies would love to have reported is people's payment of council tax. Again, a large amount of money. That's not reported. What you don't see in a credit score is people's non-payment of essential bills. And you don't get that vision or view of disposable income versus fixed expenditure. Credit scores also do not give, in their raw form, an indication of anyone's net income on a monthly basis.
Okay.
So I don't think I think they're tech that's appropriate for a segment of the market, but they don't work well for our customers.
Understood. So Tim is asking when the dividend will be paid to investors in 2025. Thank you, Phil, for saying the first interest coupon will be made 12 months after the offer closes, and we're hoping to close this in January, and then every year thereafter. What I would add to that is that to date, obviously, Salad has paid interest payments that stem from the first offer that you did with us almost 2 years ago. So just confirm that.
Yeah, that's correct. Yeah.
Okay. Just looking at something completely different. Tim, Phil, can we look 3 years out? And to what extent may Salad's footprint in this financial inclusion area have widened? Or how does the character and the presence of Salad change over the next couple of years?
Well, I can take that in terms of our aspiration. I mean, our aspiration is to be, well, we are now the largest consumer CDFI in the UK from a standing start. I think there's a lot more to be done within the sector. The book has risen quite considerably. We've lent over £230 million since we started back in May 2019, and the numbers and demand continue to grow. We do a lot of analysis of the consumers and their financial lives. I'm sort of very cautious about what we're seeing at the moment. I think other colleagues in the CDFI sector and the credit union sector are seeing financial stress on consumers. So it's something we are actively monitoring. But I mean, hopefully the good times will come back for consumers. But right now, I think there's a big focus on what's going to happen in the next 6 months. I mean, we're even acutely aware of what happens to consumers between a December paycheck and a January paycheck. And I think one of the things that stands out from Salad and two other commercial lenders is the way that we deal with our consumers. We recognize that those consumers won't have a clean payment history like a lot of prime customers have. They'll have problems in their personal lives, problems with health, illness, loss of job, social justice issues, and it's our forbearance that really stands out. So how we deal with our customers when they can't afford to pay us. There's no interest, there's no late charges, there's no fees. We will listen to the consumers, we'll suggest a good way of them getting out of those problems. Not all of our customers go on to pay us in full, but it's the forbearance piece that's really important for us as a CDFI. So we've got fully trained staff. All of those staff are able to recognize signs of vulnerability. We're now using Product Sage, which is a AI piece. We're looking at 100% of our inbound communications and our phone conversations, and we are analyzing those to ensure that we've picked up vulnerabilities that staff may not have identified. So it's our concern that customers need to have a break. And if you give those customers the right advice and that break, they'll get back on track and hopefully get on back on track with their lives in general. So it's not just about lending, it's about how you deal with the customers throughout the course of that lending period.
Yeah. Phil, thanks for answering Justine's question. Can you sell your investment at any time, and how does the interest work in that scenario? And Phil, there is no active secondary market for the bonds, so you should expect to hold them to maturity, which is 5 years. Thank you, Phil. And I make no apologies for coming back to this issue, which is, Helen, related to the high APR, and I checked before this call and see many subprime lending options charge more, and that on your website you show when a cheaper option is available. What's the rate of defaulting borrowers? Is the interest rate you charge as low as it can be to cover defaults and appealing interest rates for investors?
Philip?
So the rate of defaults is just shy of about 15%. The net losses after recoveries and collections is lower than that, around 10 to 12%. But the APR that we charge reflects the risk of loss, and it also has to cover the cost of acquiring customers as well. And I think the most important thing is that this business is set up to be sustainable for the long term, so that we can serve the maximum number of customers that we can. So we do have to price.
Oh, this is where you take over, Tim.
We do have to price for risk, I think is what Philip was going to say. He did say he was going to have some problems with his internet. Hopefully he'll dial back in. But we do price for risk. It is our aspiration, hopefully with the arrival of a UK bank to support us with the senior debts, that we would look to bring our interest rate down. But I think there will always be a risk-based pricing element to the individuals that we're lending to. So hopefully that's helped Helen with her question.
Yeah, and let's be, at Ethex, we've done very rigorous due diligence on Salad, and we've been doing so for 2 years. And it's fair to say that Salad are building. You are still loss making, but that's all projected and planned, and those losses are becoming smaller. So that's all important to realize in the context of these APRs.
Absolutely. And we've been supported not only by our Ethex investors, but also by HM Treasury through the distribution of dormant asset monies through Fair for All Finance. We have received investment and debt from them. And in the same way that your due diligence was punishing, as it appropriately should be, we've been through due diligence from HM Treasury through Fair for All. So we are supported and are recognised for the work that we do in this sector.
Yeah. Phil, Tim rather sort of seamlessly finished off where you started. So welcome.
Sorry, bad internet connection.
No worries. I think we're reaching the end of this Cuppa Club. So just sort of generally to both of you, if there's one thing you'd like investors and supporters to take away from today's call, what would it be? Oh, and we've just seen from Justine, do you anticipate further rounds of investment in the future?
I would hope so. I think what we've seen in the past is that interest through Ethex has shown little sign of slowing, and we're incredibly grateful for that. As I said, it's very valuable capital to us, and we know that there is still substantial unmet demand for fair and affordable finance. So we need that additional capital to continue to support our customers.
I would say please take some time to go and look on YouTube. We actually did some interviews with customers, and in fact, there's a lady who's a fantastic example of someone that hasn't got access to mainstream credit on the Ethex offer page. But we have and do spend a lot of time talking to both customers and potential customers about their financial lives. And I think it's really important to understand the difficulties that these individuals face. And there are some great examples on our YouTube channel of customers where we've asked them about what led them to take out a salad loan or what problems they've experienced. And those problems are still there, I'm afraid. But have a look, and thank you for your support.
Okay. Well, thanks to both of you. And I just want to remind everyone that the bond offer, which is 9%, is now live on Ethex. And we will follow up with an email to everyone who has registered for this call, and a recording will be made available on YouTube and our website. So thanks for tuning in. Thanks, Tim. Thanks, Phil, and good luck over the rest of the offer period and beyond. Thank you.
Thanks very much.
Bye.
Thank you.
Thank you.
Thanks, Sean.
Bye.